So welcome everybody. I have really had fun because you all are sharing where you are coming from, what states you're in, and I love it. This picture, I'm wearing a necklace that in the picture that has all 50 state charms because I had a bucket list item to experience. I had rules on what was an experience, to experience all 50 states before I turned 50. So I did that bucket list. So it's really fun to see how many people are in all over the country here today. So it's really exciting for me. Okay, so about this time every year, I start figuring out what my word of the year is going to be for next year. And I've got a lot of contenders, but I'm going to just have my word of the day for today. And my word of the day today is simple. So I took out a lot of the fluff in this presentation about what I am on this slide. So I'll just make it really simple. I'm an accountant. I first started as an accountant, became a CPA. And what that means is I became a public auditor. So I went to all different kinds of companies, including and especially nonprofit organizations, and audited their books. So I saw a lot of different industries and their books. Then I became a social worker. So I'm an LCSW in California. And now, well, I joke that I'm qualified to prepare your financial statements and then ask you how you feel about them. But I do have my own counseling practice, and I have now this wonderful coaching practice where I work with other therapists, and I truly am living out my dream. And I am going to be here as support for you, hopefully, in how we can really make the best and finish strongly for 2023, and how we can set up our practices for success in 2024. All right, we're going to get to the basics. We're just going to make this very simple. So very simply, the accounting, the books of your business have to do with taking your gross income. Usually that's your reports from SimplePractice. If you're a SimplePractice customer, I hope you're a SimplePractice customer because it's all right there. If you provide all your counseling and it's all being accounted for in SimplePractice, SimplePractice is keeping track of all of your gross income, and it does not include your expenses. So we have to have some kind of system, some kind of accounting system. I'm going to go over to that a lot more in a little bit. But we want to keep track of what our business expenses are. So your gross income minus your business expenses is going to be your net income for the year. That is what you are taxed on. And that is the main computation that we want to make sure we're keeping track of. Many people who have worked with me kind of roll their eyes when I start mentioning Shark Tank because I love Shark Tank. Shark Tank to me is like this school of business because you can learn a lot, not only about business, but in my opinion, you can learn a lot about life. I'm sure you're all aware of what Shark Tank is, but it's this TV show that different business owners propose an investment in their business to these sharks who decide whether or not they're going to invest in the business. The business owners start their proposal by saying how much they want their investment to be and what percentage equity that they're willing to give up. So when they present that, some are far too confident in their businesses because they have very little sales. So that gross income is very little, but they're going to ask for a huge amount of money to invest in their company. Some should not have investors at all, and they should stay with their one-person show operations. All right. But most of them do not volunteer what that net income figure is until they're asked. So we're going to talk a lot about different examples of how people are really only focused on that gross income to the detriment of what their net income is. We've got to figure out what that business expenses portion is. Okay. That can make or break our practices. All right. So let's talk about some danger zones of our finances with our private practice. So I really look at what is not being said, just like in Shark Tank when they're not talking about how much net income they have or how much debt they have. I've listed out 4 major danger zones. So the first one is focusing only on gross income versus net income. So I do have many examples of this, But one example is I know of this woman who, I won't say her name or her agency, but she has a podcast, and she created this goal where she was really focused on, in her business, she wanted to reach $1 million in sales for a year. So she wanted to hit a 1 million gross income figure. And so she kept talking about that. And the service that she provides, she hires people to provide this service. So she also, I think, provides this service, but she hires other people to help her as well. And she just kept harping on $1 million sales for the year, and she made it. She got to $1 million sales. But what she wasn't telling people is how much her net income was. So she just only talked about the $1 million. Then she actually went to, okay, now I want to do $10 million. But what she doesn't say is how much she has to pay out the people who are actually the ones providing that service. And that's a far greater number to realize, because even though you might make $1 million in your business, what are your expenses? There are many people, including especially on Shark Tank, who present that, yeah, they have $2.5 million in sales, but they have so much debt and they're not even breaking even. So they have a loss. So how does this apply to our world? Sometimes we are so focused on our billing rate or our how many clients we have, or what where our gross income is, what's coming in from the insurance companies, everything, that we're missing the bigger picture, which is what is that net income figure, because we really are, depending on how large your business is in terms of if it's full-time or part-time, or your mission for your business, you want to make sure that it's not just about the gross income. You want to find out what your net income is, so that if your goal is to be able to provide for yourselves and your family budget, then you really need to be concerned about that net income. So another danger zone is expecting more from your business too early. So just because you want to be full-time eventually in your private practice doesn't mean that now might be the right time. So sometimes we tend to overcommit, that we kind of we don't take into account that experience that we need in order to really have a thriving private practice. And then the third danger zone is losing sight of your why you want to help people, right? So I saved the best for last, which is comparison is never a fair fight. Whenever we are talking about our counseling practice, we have this, unfortunately, we can engage in a lot of comparison analysis, comparing our business, comparing our billing rate to other therapists in our area or other therapists in general. Just like social media, the grass always looks greener somewhere else, because there are things that are not being said. All right, simply put, what is your dream? So many of you who have worked with me individually know that my first question to working with you as in a consultation is, what's the dream for your private practice? And let's make sure we're really keeping that front and center. Okay, so then how are you going to measure success by that dream? Okay, so in talking about setting ourselves up for a successful 2024, we want to make sure we review what has worked and what maybe needs improvement in 2023. So these are some of the questions that I would encourage you to ask yourself about your private practice. So what has financially worked really, really well for you this year? And the only way to answer that question, what has worked well for you this year, is to know current numbers. There's not really going to be a way for you to say, the net result of some of my efforts has really brought this amount of net income. It's financially worked. You have to know your numbers currently. Why do you think you saw that success? And do you want to replicate those steps? And if yes, how can you do so? So in my review of 2023, I made a commitment to explore a certain kind of therapy. And I became an independent contractor on the side, yet again, another side gig for me. But this was really important to my practice. And I started working with a company as an independent contractor. The training was intense, but I went through it and I did it. And it worked really well. But it was a large contribution of my time and energy this year. And it was to the detriment of other areas that I wanted to focus on. That was all intentional. But now as I review 2024, that was financially very lucrative for me. But now as I review 2024, I think I'm going to ease back on that work and highlight some more work. So because it was so financially lucrative, I want to make sure that when I'm supplementing with that, if I'm going to cut back on this area, I have to make sure that this area that I'm going to supplement it with is equally financially lucrative. So what money issues have been particular challenges for you this year? Included in that analysis, I hope you're also keeping track of what personal financial issues may have affected your business this year. So have there been some particular financial drains on you this year that maybe you won't experience next year, or vice versa? Have you had some windfalls personally that you might not be able to have in 2024? Okay, so this is just a couple of my suggestions, and then we're going to get to your questions. But for a strong finish for 2023, this is the nerdy accounting part of my presentation, which is just some tips on different things to consider for your books. So make sure that you are current with all of your billings. So let's make sure we have really collected on any outstanding balances for your clients. So if you still haven't billed some of them, let's make sure we bill a lot of them, bill all of them for all the work that you've done in 2023. I know sometimes when people work with insurance companies, maybe because of audit or different documentation issues, they may have come back to you to say, before you get reimbursed, we need you to resolve this documentation issue or what have you. Let's make sure we get all those done in 2023 so that you can start really fresh for 2024. Also, just a reminder, because I get this question every single time or some variation of this question, remember, you do not get to deduct the difference between your billing rate and what you received. So as cash basis taxpayers, there's either cash basis or there's accrual basis. And I have yet to meet any therapist who is an accrual basis taxpayer. So pretty much talking across the board, we're all cash basis taxpayers as therapists. You pay taxes on the income that you receive. So you don't get that deduction, but I do want to make sure that any money that you are owed is paid up by the end of 2023. So let's make sure all the billings are complete. It's cleanest to pay your credit card off fully by the end of the year. It's best if you don't even have a credit card for your business, but I certainly understand why some therapists do have credit cards. But just to avoid, you can still deduct if you made a charge on your credit card in 2023, but you don't pay that bill till 2024, it's still okay to take that deduction in 2023. However, it's really cleanest to pay your credit card off fully by the end of the year. So I give the example. Let's just say you get your statements for your credit card on the 5th of each month. So you're going to get a credit card statement on January 5th of 2024 that will have most of your 2023 expenses. Let's say Psychology Today charged you on 12/15. They charged you $29.95. Try to pay that balance off before December 31st. Pay off the balance due in your credit card, even though you're not going to get the statement till 2024. It's just cleaner. I also like that the payments that you make in 2024 have to do with 2024 expenses. Okay. For anyone who may have a practice where you are an S corporation, make sure you take care of all payroll issues in time. Give the payroll company time to process your payments or adjustments. So it's definitely not recommended, but there are some therapists who are S corporations, and I'm going to get fully into that a little bit more later in the talk today. But for S corporations, you have to be paying yourself a salary, and some people take a gross salary without any deductions and wait till the end of the year to make that adjustment. I do not like that. It's not acceptable IRS wise. So make sure that if you are doing that, but even if you have adjustments, like you're going to pay yourself a bonus, make sure you give your payroll company enough time to be able to process that. You can't just go to them on 12/30 and say, I need you to cut me a payroll check on 12/31. They need time to process that. So let's make sure that's all clean. All right, be ready for the final estimated tax payments. So remember, as therapists, you are not an employee unless you're an S corporation, but you are not an employee for sole proprietorships and partnerships and LLCs. Again, not S corps, but you'll be making estimated tax payments. The last payment is due on January 15th of 2024. So if you're paying estimated taxes based on last year's business income, so the rule is to avoid an underpayment of tax, you have to pay 4 times that year that's based on 100% or 110%. It depends on your income from last year. If it's over $150,000, you have to pay in. You have to make estimated tax payments of 110% of last year's taxes. So that's kind of a convoluted way of saying that, but basically what it is that you pay taxes based on last year's numbers. Now, let's say your private practice had a lot more net income than last year. It's not that you don't still owe that more in taxes, but you won't get an underpayment of penalty as long as you paid in last year's taxes. So what I want to avoid is you making estimated tax payments and thinking, oh, I'm all done and I won't have this big surprise by April 15th. But April 15th will be a big tax surprise and not great tax surprise if you have made a lot more money, but you haven't actually saved more money. I'll get to that a little bit about how you have a plan of deducting 40% every single month for taxes. So you have that money available. Make sure you have a retirement plan in place before 12/31/23. I don't care how small your private practice is. You can have a retirement plan based on your private practice. But you have to have the plan in place. You don't have to have made a contribution, a financial contribution to that plan, but you do have to have it in place by December 31st of this year in order to have a contribution to that plan be deductible. So let me just give you an example of what I do. In my sole proprietorship, I have a 401k plan. I have a solo 401k plan. I don't have employees, so I'm allowed to have that plan. There are all different types of retirement plans. You really want to talk to a retirement expert. I will list out the different kinds of plans as examples in a little bit. But so I don't know how much I can contribute yet because I don't have all the numbers for my 2023 year. When I start to do my tax return, so early February, I start to do my tax return. I do my tax return, and then the computer program that I use for my tax return tells me how much I can contribute to my plan. As long as I make that contribution by April 15th, so if I contribute it into my solo 401k plan, let's just say I can contribute $30,000 because that's how much I can for a salary deferral for my retirement plan. If I contribute $30,000, if I write that check and put it in my account, by April 15th of 2024, I can take that $30,000 deduction on my tax return for my 2023 income taxes. Doesn't affect your payroll taxes, but it does lower your income taxes, and that's significant savings. So just make sure you have that plan in place. Also make sure that if you are going to have a tax preparer doing your 2023 tax return, secure a tax preparer now. By now, many CPAs and CPA firms have already sent out their organizers, which is just their clients' ways of submitting their documentation for their tax year. So they've already sent those out because they're getting ready. Do not wait to the last minute to get a tax preparer because most of them are really inundated. The longer you wait to give them your information, the greater the likelihood is they will need to extend your return. So quicker you can get it in, but the quicker you can secure a CPA, the better. A lot of CPA firms are really busy right now, and they might already have full practices. I have several friends who are CPAs and they're full, and they also aren't accepting certain minimums. So they have a certain minimum that they will charge you for a tax return. So try to make sure you get a CPA early. I have a slide about when you need a CPA or not. Okay, so now we're going to talk about the B word. We're going to prepare a budget for 2024. So review each category of expenses for 2023. This can be done on Excel. It doesn't have to be on an accounting software program, but you want to look at your category of expenses and see if anything is really not what you wanted. It doesn't match your values. If there's a category that's really high, let's see about maybe are you getting a full value and is there a way to lower that? So evaluate if you are getting value from all those expenses, especially subscriptions. I find that many times we're not really, that automatic payment of expenses is not really, you're not getting the full value. So let's trim where we can. Consider a review of your policies. Are there issues like maybe are you losing income on people missing sessions? They're canceling before that 24-hour period or 48 hours, whatever your policy is, but you're not adhering to your own boundary of charging for missed sessions. Are you on too many insurance panels that or it's really cutting into your administrative time? Are you offering sessions when clients are behind on back payments? I have a policy where I don't accept any work if they're behind in payments. I don't have sessions unless everything's up to date. Or are you not limiting your pro bono or sliding scale clientele? So those are things to consider for your budget and just to review your policies. Prepare a personal financial budget too. So let's stop any bleeding and any expense that, again, you're not really getting the value for or is maybe unnecessary. So consider a specialty in your private practice. And if that specialty requires training, budget for those expenses in 2024. And then let's make sure we hire experts when necessary and invest in the system. So again, I really want you to have those funds first, though. I want that mindset to be, if you don't have the funds for your business, you got to wait until you do. So I don't want to have you getting debt because you want to invest in some expenses. Let's wait until you have the money in your business. All right, so there are three main accounting points to consider for the end of the year. So as a business owner, you may be paying others for rent or services. And there are more categories, but these are two categories for therapists where you might be triggering whether or not you need to send these people that you pay for either rent or services a 1099. The rules are really pretty complicated. That's one of the benefits of having accounting software because most accounting softwares I shouldn't say most. I don't know about other accounting softwares, but I do know QuickBooks does do this. QuickBooks keeps track of who you need to send out a 1099. I can talk more about this if people have more questions. You can submit that. But the rules on this are very complicated, which is another reason why you might want to consider having an accountant. So that's if you pay anybody for rent or for services, you might need to collect a W-9 from them, and you might need to send them in January a 1099. As a business owner, you likely will have to pay estimated quarterly taxes. So services like TurboTax, if you do your own tax return, which is fine if you're able to do that. If TurboTax does have the feature where you can have it calculate your estimated tax payments. So make sure that you have some system that's actually calculating that for you. And then finally, the last accounting point is there are a number of different retirement accounts that you could have. You could have a SEP IRA, you could have a simple IRA, or you could have a solo 401k. Those are three examples. Even though you might have another retirement plan from a spouse or previous employer, my suggestion is if you don't know where to go to get your own business retirement account, if you worked somewhere else and you had a retirement plan with them and you like that bank, then consider having everything in the same bank. It just makes it easier, but that bank will probably should have investment advisors that can advise you on what retirement account is best for you. And remember, that has to be set up by 12/31 in order to make a deductible contributions. Okay, I'm just going to review some of my oldie but goodie advice. Keep your private practice pure. So do not constrict your private practice. How do you constrict your private practice? It's by having a lot of personal financial pressure on your private practice when the real goal of your private practice should be to start small and to build out as you build that clientele, as you build that expertise, okay? If you need more money for your personal budget, I'd really encourage you to think outside of your private practice, because we're going to try and keep this as a pure way of living out your dream of having a private practice, but where it doesn't have that financial pressure. So consider maybe either taking on a side employment job or other ways that can make money that don't change how you feel about your business. When I meet with people individually, I'm really zeroed in on how people feel about their businesses. If it's not working in your state, so if you are not getting clientele, you're having a hard time with referrals in your state, my best advice is not to get more licenses to practice in other states. Let's fix what's going on at home so that you can replicate that to other states if you need it. But if it's not working in your state, I'd really encourage you not to expand that out. I know far too many businesses that franchise their business before they've even developed that proof of concept with their own store. So let's not be one of those. Consider supplementing your practice by taking on maybe W-2 work, which is employee work, or some part-time work, or you might want to consider doing some contract work with some companies that, hopefully you're with a company where you don't have to pay them, but they pay you a certain percentage of your counseling fees, but they give you those referrals. Consider specializing in your practice. They say that the riches are in the niches, and I do believe in that. I do believe in really having a specialized practice, but it's totally fine. Like I have a few specialties in my counseling practice. Namely, OCD is one that I really do focus on, one diagnosis. I also have a few interventions that I like to do, and for different diagnoses. But I also serve clients who have generalized anxiety. So it doesn't mean that you're only limited to, I'm not only limited to working with people with OCD. Just like I know accountants who work with specific groups, like maybe dentists, but they do have other clients, but that's their specialty. So you really zero in on one specific group, and that's where you're the expert, and that's where you're known by, and it increases your saleability. Do not commit if you do not understand the consequences. So if you do not know what an S corporation is, you do not know if that is the best step for you. Evaluate all expenses with a judicious eye. Be especially careful in rent expense. I know that many people commit to rent or leases or something right at the beginning before they really know that they've got that regular clientele to be able to meet just the bare minimum, which is that rent. If you don't have the money now for that out-of-town conference or training, let's wait till you do have the money. There are lots of great telehealth conferences and trainings that you can do, but you can do it organically from home. Okay. So again, of course, my oldie but goodie is consistently every single month. If you can be saving 40% of your last month's net income, just putting that aside for taxes, but also in addition to that 40% saving for taxes, if you can retain some amount in your account, like I suggest 20%, 10 to 20% that you can retain in your business account for those rainy days. Okay, wouldn't it be amazing to have a cushion for the holidays? I'm going to go through fully on this slide, but the whole idea is that there might be some opportunities for you as a therapist to be able to create some kind of self-care plans for our clients, because it can be an incredibly stressful time as well as incredibly joyous time too. But this is also a time when many of our clients want to take time off. Time off from therapy means that we also are not earning money, but we also might want to take time off for the holidays as well. So if you have this mindset that you are saving in your business for those rainy days, but also for the holidays, then you do have that cushion that you can be able to draw down from your business. on the slow times. So these are just some of my tips. Is do things today in your business that bring gratitude for your future business days. A business mindset that has you paying now to set up a secure future is a very healthy mindset. Do not spend money in your business unless you have the money already. If you do not have an accounting system, update your spreadsheets now. Waiting until you are closer to April 15th to update your spreadsheets is a lot of added stress. Consider investing in an accounting system to begin 2024. It's a great time to review maybe how much time you are spending in, or maybe are not spending and should be spending in your books of your business. And you might want to learn it might be a great time to start learning how to do maybe a QuickBooks or to invest in some kind of accounting system other than Excel. All right, this is a slide that I used from last time, but for my Psychology of Money talk, but I just thought it was a great reminder that the most important thing that I keep in mind for your private practice and your books is peace of mind. So let's do things that guarantee that future peace of mind with your business. All right, I'm going to get to some of the questions that you had submitted. How do I set up finances in starting a practice? So the first thing that you would do is I'm just going to start from the very basics. We're going to make this simple, is go to irs.gov and get a tax ID number. You are going to be asked for a W-9 a lot because people are going to need your tax ID number, and you don't want to be giving up your social security number just willy-nilly on that W-9. You don't want people to have access to your social security number. So you are a full-fledged business. So in order to put your shingle out, let's get you a new tax ID number. It's very, very simple at irs.gov. Now that you have that tax ID number, you need a separate business account. It doesn't matter to me how small your private practice is. You have to have a separate business account. I mean, have to is for LLCs. It's an absolute must if you're a company. But for a business, my have to is you have to have a business. It's technically not a requirement because as a sole proprietorship, you are your business, but you have to keep separation of personal finances and business finances. So open that business checking account. If you also can open a business savings account, it's even better because I want a dedicated savings account for your taxes that you're automatically transferring money in just to save for taxes. So that's the minimum. Then in order to be able to start practicing, you have to check with your state and you have to check with your city on business licenses. And you also have to get malpractice insurance. Okay, so those are the basics in starting up your finances. How much capital is needed to start a full-time practice? It is not as much as you may think. It really isn't. The best and cleanest way is for you to put what I call seed money into your business checking account. So you make one investment of, let's just say $1,000 into your business checking account. That is considered an owner's investment in your account. What a lot of people do, which I don't recommend, is they want to start their private practice and they just start paying things personally in their personal account. It's way cleaner, and you're going to forget what our business expense is versus personal. So what I recommend is doing one lump sum payment, and it is not as much as you might think. It doesn't cost anything to get. I don't think it costs anything. If it does, it's less than $25 to get a new tax ID number. Actually, I know it's not. It doesn't cost anything for that. Malpractice insurance will cost you a bit. You do have to pay usually a small license fee to be able to get licensed, but it's nominal. Now, we haven't talked about rent. So if you're doing telehealth, you want to get a SimplePractice subscription that you want to sign up for video if you're doing telehealth. If you can do telehealth instead of making a commitment to rent initially, great. If you do really want to do face-to-face consultations, face-to-face sessions, that's fine too, but just maybe try to do it small scale, like maybe rent a 1 day a week, 1 day every other week, where you're seeing clients, but just don't make that full-time commitment yet. But it really isn't as much of a capital investment as you may think. What are the pros and cons of the different types of business entities? Okay, so the easiest, my word is simple today. So the simplest form of a business entity is your sole proprietorship. If you don't do anything else but get a business license, a tax ID number, and a business checking account, you are now a business. And you are going to be filing what's called a Schedule C, which is a portion of your personal tax return that has to do with your business, your private practice, as the simplest of business ownership. A business entity is a sole proprietorship. However, the con of a sole proprietorship is you do have some exposure. So you and your business are one and the same with a sole proprietorship. So you do have some risk of being in a litigious environment. If you were sued, technically you do have exposure for your personal assets. However, if you have ample malpractice insurance, I don't know. I mean, you might be able to find somebody, but I don't know of any therapist who has been sued beyond their malpractice insurance where they've lost their home or they've lost their car or any personal assets. I just don't know of it. So, but unless there are certain types of businesses that I draw the line. So if you are an S corporation, sorry, let me back up. That's not an S corporation. Let me put that aside. If you are have a clientele that is high risk, then you may want to consider that there's a little bit more exposure for possibly more litigious nature to your clientele. If you work a lot with, if you're doing a lot of work in the court systems, it sounds like that maybe if you've got a lot of child abuse situations, domestic violence, it's just higher risk. So you may want to consider that. If you work with any associates where they are working under your license, I think that's a deal breaker where you need to have added protection, which is becoming either an LLC or an S corporation. So you get that protection. And then the other one is if you have employees. I draw the line at employees. Employees, you definitely want that protection from your personal assets because there are all kinds of issues when you have employees. You cannot predict what's going to happen with employees. So that's a very litigious area. I would highly recommend getting more protection from your personal assets by becoming an LLC or an S corporation. Like, for example, as in California, I cannot become an LLC as a therapist. So I would need to become an S corporation. What is smart financial spending? Smart financial spending is really saving for your future. Okay, that's just my easiest response to that because I'm looking at the time and I want to get to your live questions. Do I need to use accounting software or is an Excel spreadsheet enough? So it's interesting a definition of what is enough, but in general, I find that an Excel spreadsheet could be enough, but there are a couple of areas that Excel will not be enough, and I'll go through that. But from my experience, I have found that most therapists who tell me that they use Excel as their method, it's not an accounting system, but their method of keeping track of their net income, do not do that on a regular basis. They do not have an updated Excel spreadsheet. From my experience, I found that usually means that they are waiting till the last minute before they file their taxes to update their Excel spreadsheet. That creates a lot of stress for you. If you are not keeping your Excel spreadsheet updated, how are you figuring out that 40% of your net income that's going to be going to savings for taxes? So if you're diligent in keeping up that Excel spreadsheet, bravo. And if you're getting the information that you need from your Excel spreadsheet, it's probably enough right now. If you don't have many clients, if the management of your expenses is not that much and you are keeping your Excel spreadsheet going, fine. What is Excel not doing for you though? It's not keeping track of your balance sheet. So why is that important? So a balance sheet is typically, I find that most therapists who keep an Excel spreadsheet are only doing net income, but they're not considering their balance sheet, which actually shows how much you're withdrawing as owners draw from your business. Okay. So I do definitely want you to know you could do income minus expenses is net income. And then you could put down your owner's draw there. That way you could do that. Another thing that you're not getting is if you were audited, you don't have one system. You don't have anything with Excel in terms of backup of your documentation of your receipts. So that's a really great feature with like for QuickBooks. QuickBooks, you can upload a PDF of your receipt or an image of your receipt and just have it right there in your QuickBooks account. Also, unless you're really sophisticated with Excel, you don't have that comparison between last year and this year. It's super easy in an accounting system to be able to show the comparison between years. So of course, there's going to be much more in accounting software than Excel, but my main thing is it's not usually updated. What's the best bookkeeping software to use? Well, I'm sure it's no surprise to any of you who have listened to any of my webinars that I highly recommend QuickBooks. I do not get financially rewarded by therapists using QuickBooks. Even if you use my discount that I can offer, I'm a QuickBooks Pro advisor. I could use any accounting system that I wanted, but in my opinion, QuickBooks is the best for small businesses because it doesn't talk debits and credits. It is form generated. However, it is not easy initially. It does take training. So I do financially benefit from people needing training in QuickBooks, of course, but I would not recommend anything that I don't. I'm very loyal and I highly support it. So I'm so loyal to making sure that it's the best. That's why I have become a QuickBooks Pro advisor because I do think it's the best system. Now I'm going to be telling something at the end of how I have two groups of therapists, Happy Campers 1 and Happy Campers 2, and I'm going to be offering more where I'm actually helping you to do the work instead of training you how to do it. But I do want to say that just getting a QuickBooks account is not going to be the answer because it does take some training to be able to know how to use it. And it's not for everybody. There are also companies that offer, like they do it all for you. They do those monthly preparation of your tax. They do your tax return too. Some of them do your tax return as well. And some of them do those monthly financial statements for you as well. So that's a one-stop shop. How do I prepare for quarterly taxes? Like I said, services like TurboTax, you can ask that feature for them to prepare the quarterly tax vouchers for you. And remember, it's based on last year's numbers. But you basically want to make sure that you have paid in. There are 4 times a year that you have to pay estimated tax payments. And remember, you have to pay estimated tax payments for your state as well if you're in a state that charges income taxes. So the best way is to go to irs.gov and to pay, and that's where you submit your payments for your estimated tax payments. But basically what it is it's just like the when you're a salaried employee, you have withholdings, and it's figuring out 4 times a year how much you have earned in your business and a calculation of the amount of taxes that you owe. So it's both income taxes and payroll taxes. It's kind of hard to explain fully how to do quarterly estimated taxes in one question as I want to do live questions. But irs.gov is going to be a way where you can start to do that calculation. I can also help you with that let me know what more questions are about that in the chat. When do I need an accountant? Okay, there is a big difference between accountants. Not all accountants prepare tax returns. So you could have an accountant who helps you with your books, so helps you record that through QuickBooks. And you can also have an accountant who does your tax return. If I find that it's a great time to just do a mental review on how much stress is taxes causing you about filing taxes. How much do you really want to be involved in the tax return? If not at all, and is creating a lot of stress for you, I think it's a great time when you start your own practice to think about getting a tax accountant involved on preparing your tax returns. It's not super complicated when you have a sole proprietorship, but there's a lot to know too. So if you find that TurboTax you're just pulling your hair out, or whatever system you're doing it yourself, then it's worth it to invest in there with a tax accountant. But if you are an S corporation, that's where I draw the line. You absolutely have to have a tax accountant involved, because now we're talking payroll, and now we're talking the filing of an 1120S, which is an S corporation informational return. You have to file as well. That I do not want you to learn how to do, because this is so not fun. What are some strategies for paying yourself, and how does one demonstrate financial security owning a practice? Okay, so paying yourself, I did a webinar with SimplePractice on owner's draw. Technically, I don't care how you pay yourself. So you could transfer a lump sum. I do want you to transfer just an actual, I want you to be intentional with it. I don't want you to pay personal expenses through that business account. Remember, we're doing separation of church and state. So you can pay yourself twice a month, but remember that how much you're paying yourself has to do with, you've saved 40% for taxes first, you're saving 20% in your business. So technically that leaves 40% that you could withdraw. I know many people are just taking money out as they have it or as they need it personally, and that's not really a strategy. So we want to make sure that we're really creating intentionality with the numbers. So we support, okay, I can take this much money because it's 40% or less of my net income. What should I gather for filing my taxes? You should have those spreadsheets all together. You should have all of your documentation, your receipts for that, and that should be ample. Okay, the most common mistake I see from business owners regarding money issues. This was also a slide that I copied from my Psychology of Money profile because I wanted to add a few more. But I also wanted to add, as we're talking about 2024 coming up, don't wait until, so a common mistake is people start their private practices before they have technical experience. So don't wait until you feel you're really experienced in a particular area with your practice. Make that practice pure. Make sure that you're confident that this is how you want to serve and that you have the right backing and experience behind that. You add way more confidence to your practice. Expecting more financially from your practice than is feasible. Again, I don't want there to be a lot of personal stress on your private practice, because how you practice, if you have a lot of financial stress, is affected by that financial stress. I want the way you practice to be the way you want to practice without that stress. Getting sidetracked from your original mission, we can easily start to be a chameleon and try to serve everybody in every way. And the biggest mistake I see is comparing ourselves, our work, or our rates with other therapists. Let's just play the long game. Okay, so I don't really have time to address these, but these are the most frequently asked questions that I get. Please see my website that I'll give you in a minute for a little bit more. I do go over some frequently asked questions there. This is just a long way of saying I soon will be helping Happy Campers number 2. If you've heard me talk, you know that Happy Campers number 1 are ones that want therapists who want to be fully involved in the books of their business, and I train you how. But I have kind of left out happy campers number 2 who want more of a full service package. So I am investing in offering that service. And that's just a way you can contact me, but I really want to get the live questions. Okay, Ruth, I'm ready for you. 9 minutes.
Okay, first question is from Anna. Can you share your QuickBooks discount code?
So I can't share my QuickBooks discount code unless we work together. So the way, the reason that is because if you go on QuickBooks right now, you will, I think their Black Friday sale was like 70% off, but right now I think if it's gone back down to 50%, you can get 50% off for the first 3 months after a 30-day trial, which is great. My QuickBooks discount code as a QuickBooks Pro Advisor is 30% off of your price after the 30 days for a full 12 months. So it's a little bit better of a discount, but the reason I just can't give you out a code. It's not a code, it's an invitation. So before I give you that invitation to be part of my books, I want to make sure that QuickBooks is exactly what you need, because I don't want to recommend QuickBooks if that's not where I think you need to have. Also, with that QuickBooks discount code, I am listed as your accountant, which might not be groovy for many people. So you have to be with me for 12 months. I don't look at your books unless you need me to, but it's usually people that I work one-on-one consultations with. That helps.
Next question is from Diana. If I open the company and business account in December, would I be able to use it for 2023 business income / expenses?
So if I open the business account, I wonder if you mean checking account. So if you open a checking account in December of 2023 and start your practice in December, and you've got everything else like malpractice insurance and tax ID number, all that stuff, yes, but you will need to file a tax return in your regular tax return. As long as you're a sole proprietor, you would have to have a Schedule C that shows your December income and expenses. So yes, you can. I'm not sure that answered your question, but yes, you can get if you were asking about a retirement account, you can and should get a retirement account in December that you can contribute a certain amount based on your practice's net income for the 2023 year.
Next question is from Bailey. I came across something recently that said as of January 1st, 2024, all LLC and Corps will be required to do the beneficial ownership information reporting, which has fines if not paid. Is this real?
Beneficial, I have not heard this. Beneficial ownership information reporting. That sounds BOIR. I have not heard of that. I will tell you that that is one of the things that I really do find that people just automatically hear that S corporations save them money, so they become an S corporation or they become an LLC, but they don't really know what an LLC means. In California, I can't become an LLC in California because I'm a therapist and service organizations can't, but then I would become an S corp. But as just like my practice is the same, but one day I decide to become an S corp and I file for S corp status, I automatically have to pay $800 in franchise tax fees every year. That's also true for LLCs. So check with your state on how much your LLC requirements are. You might not need to become an LLC. If you already are an LLC, then of course you would go lower than that. Great, but I don't know. I don't know of an LLC charge that is on a federal return. So all states, I don't know about this beneficial ownership, if that's a federal thing or a state thing. So I will look that up. I've written it down.
Next question comes from Suzanne. If I pay something at the end of 2023, can I still write it off if the payment didn't clear my account until 2024?
Yes. So again, as a cash basis taxpayer, you can, because it's when, if you were writing a check, it's when that check was mailed, because that's the release of ownership. You've paid it by mailing it. If you do a bank transfer, then if it didn't go through the bank until the next day, which is January 1st, it's still fine. That's a timing difference. But yes, as long as you've paid it and you've done it, then yes.
Next question from Paula. Can I fully write off as an expense any outstanding billing that I don't think I will ever get?
Nope, you can never write that off. Never, never, never as a cash basis taxpayer. If they have $10,000 in outstanding bills that they never paid, you can never write that off because you've never been taxed on that. If you were an accrual basis taxpayer, yes, you've been taxed on that. You have to be taxed on the invoices you send out, even if they haven't paid it. So as therapists, we would never want to do that. We would never want to pay taxes early because we want to make sure they pay first and then we pay taxes on what they've paid. So no, you cannot ever write off that billing. That's why I really want you to zero in on how much you are doing with pro bono work, because you can't deduct how much you wanted to spend, how much you wanted to get, and how much you actually did. Can't write that off because you haven't been taxed on it.
Okay, I think one more question. I think this will be the last one for today from Laura. What about outside forms of income like grant funding, donations, etc., for a nonprofit?
Okay, so a nonprofit is a completely different baby than a sole proprietorship. I know of many therapists who think that they want to become a nonprofit organization, and yet they have been struggling with even being interested in doing the books of their business. And my first red flag is absolutely not. The accounting for nonprofit organizations is so different. It's so different because people who invest in nonprofit organizations as donations, they get to deduct that. It's really hard now with the new tax rules, but they get to deduct that on the tax return. The IRS is really scrutinizing nonprofit organizations. But it depends on what income you've brought in. If you're saying some grant money that you come in, it really depends on what it is. If you're a nonprofit and get donations, or you're a nonprofit, what nonprofit means is tax exempt. You're not paying taxes on donations, okay, because you're a tax exempt organization. But if you're talking about as a therapy practice, if you've been granted some money, it depends on the terms of the grant, and when the time, like when you've been paid versus when you have to pay taxes. It's really complicated. Reach out to me via email if you have particular questions about that. But if it's about a nonprofit, everything that I pretty much talked about today is different for nonprofits.
Okay, I guess we can do one more.
Okay.
From Leandra. Every month, I transfer most of the money from my business checking to my personal account to cover all expenses, as I don't have a business credit card. Would you recommend another approach to balancing both accounts, or would you recommend a business credit card?
Okay, every month I transfer most of the money from my business checking to my personal account to cover all expenses. So I'm assuming those covering all expenses is including business expenses. So I do not recommend this method. I recommend that you pay all of your business expenses through your business checking account. If you have a business checking account, you have a business debit card. Okay, so use your business debit card for paying your expenses. I do not recommend having a business credit card. However, I will tell you, I have a business credit card, but I am religious about, I have no debt on my card. So I pay it off. I pay the current balance all the time. So I never have a running balance of that. So debit cards, some people don't like to use and prefer the ability to use a credit card, but I'd really love to have you have the mindset of just paying now for any business expenses. So I really don't recommend transferring any money to your business, to your personal account that relates to spending for business purposes. I really want you transferring 40% to it. I don't care if it's personal or business savings account, but it's a dedicated account. What does that mean? That means it's only for taxes, for your business taxes. Okay, so don't transfer the money personally unless it's actually owner's draw that you can use all for your personal expenses. Keep the two separate.
All right. Well, thank you so much, Edie. Yeah, looks like we went through a bunch of questions. I'm just going to put one more slide up. I wanted everyone to save the date for our next webinar. We have one more left for the year on the 7th. And this is where we're going to be covering measurement-based care. Ruth will insert the link down below if anyone is interested. But just again, thank you so much, Edie. I mean, we've covered so much this year, and you've really, really helped everyone. And I think everyone just loves your bright and positive spirit, and you always go through every question. So thank you so much for being here with us, Edie.
Thank you, Cheyenne.
And yeah, we'll